Hey guys, so in this video, we're gonna talk about diversification because I got a lot of questions from all of you asking me how do I diversify, what's the technique in terms of diversifying your money, how do you spread your money in the stock market. Before that though, before I share everything, this just came in. I'm not sure if people saw the post that I posted in Facebook. It was also sent in I think I posted it also in YouTube as a picture, no? But yeah, this is in. Thank you so much. This is a silver play button, the silver play bell. Thank you. It's an honor to be part of all of you. To those that are watching, to those who are part of the 106 subscribers watching this video, thank you so much. It's I never thought that a lot of people would be able to subscribe to the channel at the start, no? Because my metric, for those who don't know, was my metric was never about the number of subscribers, but my metric was the number of videos that I would make. So I wanted to make, up until now, my goal is still to make 10,000 videos. So malayo pa rin, we're at 1,400 videos, I think. So it's still a great way off. And yun yung parang pamana ko na rin sa Filipinos, no? As long as YouTube will be there, all of my ideas, all of my thoughts, all of my insights about investing will be there. So I hope that I hope that as long as I keep on making content, I hope that it gives so much value to all of you. So this is for you guys. Thank you so much for being part of the vlog as well. So I'll just put this down since this is a raw vlog, no edit. There. So diversification basically is not putting all of your eggs in one basket. I'll try to explain as much in this video as possible. However, I wrote that on this third book, Stress-Free Investing. It talks about how you possibly can diversify your portfolio depending on your style and your narrative, especially also if you're a long-term investor, especially if you're a trader. How do you mix it up? So majority is here, but I'll try to share as much as I can to all of you. So first things first, the concept of diversification means that you don't put all of your eggs in one basket. It means that not everything should be placed in one trade. Not everything should be placed in one investment or one asset class. And the reason why I say that is basically this. Number one, a lot of people, when they also invest, they think that they're diversified because they have UITF, they have mutual funds, they are invested in an index fund. That's not diversification because they are basically just one asset class altogether. The legit diversification is putting investing in different asset classes. But since we're just gonna focus on the stock market, I just want to zero in for those who are already invested in the stock market and just want to diversify internally. But diversification per se, no, my suggestion for all of you is that if you are invested in the stock market, you need to have other asset classes that give you a counterbalance to the stock market. And that's why I'm confident, not confident, but that's why I'm okay in spite of having volatility, because I have other assets, investments that are different, separate from the stock market. And that's where cryptocurrencies come in, that's where gold comes in, that's where REITs will come in. Although REITs is still a product, it's still a paper asset, but it somehow gives you a different dimension into all of it. Bonds is also a paper asset, but it gives you also something that's different from the volatility of the stock market, and it gives you cash flow, it gives you passive income, provided that whoever whatever company that you borrowed, that you lent money into, will actually pay you. So that's the caveat lang there. Bonds will remain safe as long as they have the money to pay you. If they don't have the money to pay you, if they go bankrupt, then that's where you'll have a problem, and that's where I think things will be a bit different for your investment. So then another thing that gives me, I guess, confidence, and the buffer is I try to store as much cash also. It's that level of cash that gives me the ability that I can take as much risk. Please remember that the stock market isn't as risky, in my opinion, as other investments out there. Forex is riskier, cryptocurrencies are riskier, investing in startups are even riskier, or starting your own business is riskier because those things can go to zero. I'll say it over and over again. If you start your own business, pwede mag-zero yan. If you invest in a startup, pwede mag-zero yan. Sa stock market, if you don't leverage, you don't short, and then you don't go into margins, possibly hindi mag-zero pera mo. pwedeng magkaroon ng paper loss, pwede ka rin mag-cut loss, you actualize your losses, but it will never go to zero. And that's one of the underlying advantages, in my opinion, about the stock market. Now, let's zero in into the stock market. Talking about the stock market, I want to share a couple of things. Number one, you diversify. When thinking about diversification, it depends on how big your money is. Meaning, if your money is around 5,000 pesos, 10,000 pesos, 15,000 pesos, 20,000 pesos, 100,000 pesos, my opinion, I personally won't diversify it. Provided that, meaning when I say I personally won't buy a lot of stocks, it will just be most likely in one stocks. And just setting up the conditions for that, the reason why you do that already is meron ka ng style. But if this is your first trade, this is your first investment, this is your first time coming in, my suggestion, just buy as much as you can. Buy different stocks so you get the feel of it, you gain the experience, you gain the skill, and you already know it. I've said this in several videos that when you're starting out, meron kang 1 million, meron kang 100,000 na investable funds sa stock market. Don't put that whole amount in the stock market. You're not supposed to do that. What you're supposed to do is put a small amount of that, put a fraction of that, then try to build your skills on top of that, try to learn the rudiments on top of that. So that's what you could possibly do when you are investing, when you're just starting out. But when you're okay already, meaning from those times that you were experimenting, from those times that you were trying to figure out what you were supposed to do, and then you've already built your style, meaning you already know if you're gonna invest or you're gonna trade, you already know if you're a position trader or a quick trader, you already know if you are buying because of dividends or you're buying because of valuations or you're buying because of growth. If all of those are answered already, then that's a time papasok yung sinabi ko about diversification. If your goal, if your money is less than 100,000, my opinion is you just put it in one stock para sulit. Provided, again, I'll say this over and over, it's very important that alam mo yung ginagawa mo na. It's very, very important that if you're trading, you also know how to cut also. It's very, very important also when you are trading, you already have those parameters set out. And it's very, very important that the reason why I say one stock is may cash ka naman outside the stock market, that you are investing an amount of money that you don't actually need, that you are investing an amount of money that, hey, if this goes down, if this does not do well, you can sleep well at night. This is something that you are comfortable with, and that's how you can possibly go with it, and that's how you can make your trade segmented. So after that, the next step is this. You also have to ask yourself, if I invest 100,000 pesos, if I put it in one stock, what if I cannot tolerate the volatility? What if I just can't? It's gonna be hard for me. So that means you have to start lower. When I say you start lower, you still start with one stock and then you grow it from there. Meaning, if you have 100,000 pesos, don't buy 10 stocks na tigda 10,000. What you do is you start with one stock at 10,000 pesos. Assuming one stock at 10,000, and then check if it goes down. Can you actually tolerate the volatility? Can you actually tolerate the loss? Because if the answer to that is no, then you shouldn't start at 10,000. But you get the logic. One stock lang muna, and then you just make it grow from there. I'm not saying na 100,000 pera mo, bili ka 10 stocks at tigda 10,000. I'm saying 100,000 pera mo, start with one stock. Then, as you start putting in 10,000, you start getting a feel of it. And this is regardless if you're a trader or you're an investor. You see na, kaya ko yung 10,000 pala eh. Then saka madagdagan, make it 15, make it 20, make it 25, make it 30. You ease your way through one stock until you have your full allocation ready. Now, the next thing you ask yourself is this. When you have 100,000 pesos, can you do it na kaya mo if it becomes 150? Are you comfortable putting it in one stock? If the answer to that is no at this moment, then that's when you probably split it. Maybe 100, then the next stock will be 50,000 pesos. It could be that logic. But if you try to see what I'm trying to say, it's basically this. You have to take it based on an amount that, for example, 50,000 pesos, it goes down a bit, you're okay to cut loss with it. yung hindi ka mabibigla, hindi ka kakabahan, or if you are an investor, it goes down. You can hold on to your position because you know the fundamentals of that company that you are buying is actually good. So ganun din. When it hits 200, you make another judgment call. Am I okay having two stocks with 100,000 pesos, 100,000 pesos each? If the answer to that is yes, then maybe when it hits 220, you ask yourself, can I tolerate 110, 110? If you can tolerate 110, 110, then increase it already. If it becomes 300, then ask yourself, can I tolerate 150, 150? Then if the answer to that is yes, then increase it again. But for example, nag 500 na, then you when you start analyzing, parang I'll hesitate if it's 250, 250. Then maybe the best course of action is to split it and go back. Can I do 150? Can I do 150? Can I do 150? So if the answer to that is yes, then just do 150, 150, 150 maximum allocation per trade. So there's a lot of rules that I wrote here, and it also will depend on your capital, but the easiest thing that I can tell you, that's one way for you to be able to do it, no. I can make another video paano kung may mga formula, how do you do it, that you can divide your portfolio based on an even level approach, no, that everyone gets equal weight, or you can base it on the market cap, or you can base it on someone who has a cheaper valuation, yung allocation mo, or you can allocate more to something that has a higher ROE. So there are a lot of variations on how you can do it. Or for those who are doing technicals, you can allocate more into a stock that's breaking out, you can allocate more into a stock that's bouncing off a support level, and that's how you actually do it. But to be transparent also on the way other people are doing it, you will notice that there's no specific rule of thumb, because at the end of the day, the stock market is not about just numbers. It's about people's emotions, and we all have different emotions when it comes to the market. What's tolerable for me? I'll give you an example, and you can answer this in the comment section if you feel like it. 10 million pesos goes down 10%. Are you willing to cut loss? Or can you tolerate a loss for 10 million pesos? The same question, 1 million pesos goes down, are you willing and can you tolerate a loss for that? The same way, 100,000 pesos, it drops down, can you tolerate a loss for that? You get what I'm trying to go by, that there will be some of you that will answer that 100,000 pesos, kayang-kaya ko yan, pero 1 million, hindi ko na kaya. There will be some of you that will say also, 100,000 pesos, kayang-kaya ko yan, 1 million, kayang-kaya ko na yan, 10 million, hindi ko na yata kaya. I cannot tolerate it anymore. But there will be some 100,000 kayang-kaya, 10 million kayang-kaya, 1 million kayang-kaya, because we are all different. And that's where also the diversification in terms of asset classes is very, very important, because at the back of your head, if inanalyze mo yung pera mo, tapos naisip mo, even though I'm putting 1 million pesos in the stock market, but I have cash also that's 2 million, I have mutual funds that's 1 million, then I have a property that's giving me rent that's worth 4 million, then suddenly, you're diversified. That 1 million pesos in the stock market, you can take more risk. That 1 million pesos in the stock market, you can take in more volatility. That 1 million pesos in the stock market, even if it gets battered down, you can absorb also the movement down. So, it has to come to a point where it's very, very personal. But let me give you some rule of thumbs also, so that some of you can think about some stuff after this video. We're closing the 14-minute mark, no? Comment below, guys, if you're learning from this. And again, another raw vlog. And if you notice, I've been mixing it more and more raw vlogs, apart from the podcast, the charts, the webinar type of video. So if you're learning from this, even if walang graphics na lumalabas, I want to hear your thoughts and your ideas. It's just me talking to basically a camera. Then after this, by the way, if this will probably come out 9:30, there will be another one around 10:30 p.m. I'm gonna talk about stock charts. So put your comments below on what stock that you guys want me to analyze. So rule of thumbs: the smaller your portfolio, please, you don't need to diversify as much. Why? If, for example, you have 25,000, you split that into 5 stocks. You only have 5,000 per stock. That means if a stock earns 50%, you only get 2,500 for it. And my suggestion is, you just better build the skills na lang, so that later on when the skills are built, you will have also the confidence to put more on a certain allocation. But the bigger your portfolio becomes, then it becomes also practical. It becomes also just responsible to become a good steward of it and hedge and diversify. So the larger the portfolio, you can buy more stocks. The smaller your portfolio, you have to minimize the purchases that you buy, or you have to minimize the allocation, because at the end of the day also, let me go to the flip side naman. You don't want to have 40 stocks in your portfolio. You don't want to have 50 stocks on your portfolio. It's not efficient. That means you're doing a lot of transactions for it. Number two, it also means that it's hard to watch more than 40 stocks that you own. It's different when you're monitoring some stocks that pasok labas ka dun, but it's different na hawak mo yung 40, and you cannot excel in something where you're buying a lot, no. If you notice, it's a market, there will be some stocks that will perform very, very well per year, and there will be some stocks that won't perform as much. So meaning, if you're buying 40, chances are there a large chunk of that 40 stocks won't do as well. There will be some that will be mediocre, and there will be just a small portion of it that will be doing well for the year. And that's what I'm trying to say. So diversification though also will protect you, that if some of those stocks that are there won't do as well, you're not totally hit. So if you have, for example, a 10 stock portfolio, apat doon underperform, at least you have 6 that are doing so well. Because I really believe this, no matter how much we manage our risk, no matter how much technicals or fundamentals we use, there will be mistakes that will be made. And I'm here to say that mistakes happen in the market. I'm here to tell you that when you trade and invest, it doesn't excuse you from making those mistakes. But your goal every time you invest it's never to play a perfect game. It's never to be perfect na hindi ka nagkakamali, but your goal, your technique, and your narrative should be, place a bigger importance on being profitable than being a perfectionist, because being profitable is more important than being perfect when it comes to the market and when it comes to investing. So kung nagkamali ka 10 stocks, 6 yung tama, 4 yung mali, you're still okay, because hopefully you placed a larger allocation on the 6 stocks that you're more bullish at. But if not, somehow you still get hedged, somehow you still get balanced out. But if you, for example, just bought 1 stock, 2 stocks, 3 stocks, and all of those that you bought did not do so well, you really go and end up with a very, very bad position. So there. But again, please do not make it too extreme. Not 20 stocks, not 30 stocks, because if it's 20 stocks, if it's 30 stocks, again, it's over-diversification. And please note this, do not diversify just for the sake of diversification. Meaning, nagda-diversify ka kasi hindi pala sabi ni Warren Buffett, but madaming tao nagsasabi kailangan mag-diversify. You diversify not for the sake of diversification, but you diversify because inaral mo this is the proper way for you to be able to put a good percentage for each of the stocks that you guys want to watch. So that's how you do it. If you overly diversify kasi, chances are a large chunk of those stocks may underperform, and the ones that are really doing so well may not be able to pull up your portfolio at a very, very large amount. And if it happened to you, comment them below. But for me, when I was starting out, ganun talaga there were some stocks that nahihila siya because I've diversified too much. So siguro at the maximum, especially if your portfolio is bigger, 10 stocks, if it's more than 10M, I think you can increase it above more than 10, but it depends also on your tolerance level, no? Ako, technique ko, the bigger it becomes, I just keep on buying preferred shares, because at least preferred shares give me cash flow. Preferred shares also give me stability, meaning on times like this, I know as long as the company has the ability to pay out its dividends, I'm safe, I'm okay that I will get cash. But above and beyond that, when there was large market volatility bringing stocks down, the preferred shares that I was watching, that I owned, didn't really swing as much. And that's what I've been doing, and that could be a technique that you could also employ when you want to somehow protect your gains already. remove it from the main portfolio and just keep on buying preferred shares, keep on buying fixed income, keep on buying bonds, so that it's out of your core portfolio for capital appreciation, but somehow it remains still an asset class that it's not cash yet, because you transferred it in either bonds, you transferred it in other preferred shares, so it maintains its value. It maintains its value, but it's giving you cash flow. So there's a lot to talk about diversification. We're way past the 20-minute mark already. So if you guys are enjoying this, put I'm enjoying in the comment section, and I'll try to make more videos off of this, so that if I don't know, a lot of people have been asking about diversification, and I'll try to do more of that. But again, a lot of it is here, stress-free investing. Link is in the description. You can order it via Shopee. And a lot of the seminars that I have right now, we have online courses with Chinkee Tan and Sean Si. They're also in the description below. If you guys got a lot from this, appreciate it if you could click the like button, the thumbs up button, because it shows this video to more Filipinos. It allows the YouTube algorithm to show it to Filipinos, at madami palang interested na Filipinos about finances and the stock market. And I hope you subscribe to my channel, and I hope that you subscribe also to my other channel, Marvin Gurmo Podcast. So I hope you guys got a lot from this. I hope that this is something that's helped you. If you'd like to know more about diversification, put it in the comment section, diversification. And this is Marvin Gurmo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.